Welcome to Trading Essentials channel. In this channel we are dedicated to help the traders who are still struggling to become consistently profitable traders. Today's topic we're going to talk about is support and resistance. A lot of people don't know what support and resistance is, or even 90% of the traders in the market are using support and resistance incorrectly. So why is there such a situation for these traders? And why most traders do not know how to use support and resistance correctly as a strategy that is beneficial and helps them to make profit in the market. Before I start explaining support and resistance strategy, I will explain the real meaning behind the support and resistance, how it is used in trading, and how support and resistance affect us in our real lives as well. I will try to use a really simple example to explain in detail. Today the product provided by Company A is $10 and we are happy to spend it. But one day Company A decided to raise their product from $10 to $15. Because of this, most of the customers from Company A decided not to keep using their product due to the prices. And Company A has realized their customers are getting less, so they decided to reduce their price from $15 to $12.50 to gain back their customers. The sales of this company rise up after they've reduced the prices of their product. Due to the inflation, Company A decided to raise their prices from $12.50 to $17.50 next year. So as we can see, the history is repeating. This is same in trading. You will notice some of the pattern is repeating when we are trading. As the result, the customer is getting lesser after they have risen up the prices of their product. So, they decided to lower down their prices from $17.50 to $15. So now we can notice there is support and resistance in this area. This is a really simple example in our real life. And why would this situation happen in our life? The explanation you can find is our psychology when trading. For each product, as a human being we have an approximate psychological target price. And once it reaches a certain level we will choose to buy or sell because of our psychological target price. This is why in trading the price will have a great reaction in the area of support and resistance. After I explained the principle behind support and resistance, we will move on to the actual scenario. First of all, how can we use support and resistance to profit in the market? We will discuss how to make a pullback trading strategy with support and resistance. As we can see in the Grand British Pound Australian Dollar chart, we must define the current trend first before we trade. And it is clear that what we are seeing right now is an uptrend. We may notice that the price has made a very strong uptrend. But the price has not continued to create a new higher high. The price has fallen below the previous higher low. First of all, we need to find out where is the support and resistance in this chart. It is clear that the support and resistance at this area. We can observe that the previous higher low has changed from the original support to the resistance and give us the first price rejection. But in such a situation, the market does not give us much information to confirm this is the beginning of the downtrend. We only have two pieces of information now, which is the first time the price breaks through the higher low and gives us a price rejection, because now the market is still in the stage of rising. So these confirmations are not enough for me. It is likely to be a deep correction or a fake breakout. To determine what kind of trend in the current market, we need more confirmation. We can notice that after the first reaction, the price did not continue to form a downtrend and broke the existing resistance. But we can also pay attention to the fact that the strength of the price in this area is gradually decaying. Some experienced traders can identify that the strength of the prices is getting weaker without the help of any indicators. It can be seen that this is a divergence. If your experience is not enough for you to identify divergence without using any indicators, I would suggest you to use some indicators such as RSI, MACD, or KDJ at this moment. So how to use these indicators correctly? We will make a video to explain it in the future. So don't forget to subscribe to our channel and turn on the notification bell to receive our latest video from our channel. Here we use the RSI as a reference and we can see that the RSI is in a situation with divergence. In this case, what are we going to expect? We have noticed after price break through major support and resistance and show us RSI divergence and the price didn't immediately go down but form a minor support. We would wait for the price to break minor support. And the price broke through the minor support and created a lower low. But currently is not the time for us to trade. When we are placing a trade, We are more like a sniper waiting for its prey rather than taking a machine gun and firing everywhere. We have to find a trading opportunity that is absolutely beneficial to us before we want to place a trade. We have to stay in one place like a sniper and wait until a perfect time to strike. This is the attitude that you should have as a trader. If a trader can patiently wait for the opportunity to come, then the trader will most likely become profitable in the future. Now we may notice the price has broken through, but because there is a very strong short-term rise in the market, we are not entirely sure whether it is still in the process of rising, or whether it has begun to enter the preparation for a downtrend. Here we can clearly see that the price has tested this level several times. 1 time, 2 times, 3, 4, even 5 times. The price broke through this area very strongly. As soon as the price breaks through this area, we know that the sellers will have a high probability to exert their strength, but the buyers immediately take control afterward. At the moment we would be hesitant, and for me I don't know whether the market is in a downtrend or an uptrend. So now what we have to do is wait patiently and observe. We have to wait for the market to give us an accurate signal, and then we go for our trade. Now we already know that in this area there is lack of momentum, or we can also call it RSI divergence. And the strong momentum in front of the collaborators, we can infer that the sellers now have an advantage. In the minor support and resistance, we can notice that there were 3 time tests and the price broke the resistance and continued for a short period of consolidation. Subsequently, we can see that the major resistance has also been strongly broken. So, at this time we can be very sure that the price will have a high probability to continue to go down. What we have to do as a trader is not to predict the market, but to wait until the market tells us what will happen in the future market. So now we have a judgment in our favor. Our first confirmation is a strong bearish breakout. The second confirmation is a lack of momentum, or we call it as a RSI divergence. The third confirmation is a short-term uptrend that is broken out of the lower low and without any higher high. Here we have a fourth confirmation, that is, a major support resistance is broken. So, we have 4 confirmations in total. At this time, I am more confident with this trade. So, when the price breaks through the major support and resistance after the retracement of the trend, the price gives us a rejection. Now that we are looking at a chart with a larger period of 4 hours chart time frame, we can use the smaller time frame to find a better area for entry. The 4-hour chart gives us a general directional guide, but it is difficult for us to look for changes in the details of the market on the 4-hour chart. So, if we're looking for good entry areas, we can go to smaller time frames such as 1-hour charts or 2-hour charts. In the 2-hour chart we can see the exact support and resistance area more clearly. Of course, when we operate in an actual situation, we don't know what will happen in the future. So how do we trade now? At this time, it depends on what kind of personality you are. If you prefer the market Fibonacci retracement, you can directly consider using Fibonacci to enter and trade at 0.5. There are many ways to enter the market, and no one is absolutely right or absolutely wrong. It's up to you to look at your own trading style. But you have to know the real principles behind support and resistance and how to use this tool to lay out our trades. There are many ways to enter the trade, including Fibonacci, price action, engulfing candle, trend line, and so on. In the future, we will also produce how to use the trend line correctly for transactions. If you are interested in our tutorials, remember to subscribe to our channel and press the like button. Some people like to use the 1-hour time frame, engulfing candle, for entry. Different strategies have different advantages and disadvantages. Trend line with the engulfing candle, you will be losing some risk-reward ratio to get a higher win rate. But if you use Fibonacci to find your entry, you will get a better risk and reward ratio, but you will also sacrifice some accuracy in your trade. There is nothing perfect in trading, and every strategy has some shortcomings. So, I would advise you to trade according to your personality. If your personality is more aggressive, then I would advise you to take a more aggressive approach to your trading. If you have a more conservative personality, like me, and prefer to wait for more confirmation to trade, I would recommend a more conservative strategy. Although you will sacrifice some risk-reward ratio, but your feelings are better when holding trades. Your mood will be more relaxed. This trade, my stop loss will be placed in this position and I will get at least 2-to-1 risk-reward ratio or even more. If the momentum of prices is stronger, I will consider taking it for a longer time period. You can notice that we can get a very good risk-reward ratio of at least 5 to 1 risk-reward. Let's move on to more examples of support and resistance. Looking back, we see that the price has made a short-term consolidation on a smaller time frame. We were able to see that there were two supports in this area, and then the price broke the support with a strong momentum so that the support became our resistance. Here we can also notice that the strength of the sellers is very strong, but the strength of the buyers is obviously insufficient. We can notice this correction is not bouncing up quickly. We also notice the pullback also reached our resistance. In the 1-hour chart we can find that there is an engulfing candle in the area of our resistance, because the price gives a relatively low position. So I will not directly choose to trade but will wait until a few more candle to close before considering to place my trade. I would also try to get at least a 2 to 1 risk-reward ratio. If the price is relatively strong, you can also consider taking it for a longer time period. It depends on your trading style. You can even open 2 orders to trade. So here you can see that we used a very simple strategy, but we were very effective in understanding what's the meaning behind the price fluctuations represented. If you have a good understanding of the meaning behind the market, it is not that hard for you to become a profitable trader. At this time, I believe that many people will ask me whether this strategy will always be effective. Of course, it will not. There will be failure sometimes. It cannot be able to guarantee your profit every time. Just like this time, we go back to the 4-hour chart to see that the price extended the previous decline and created a lower low. We notice that the price also gives us an engulfing candle, but the price does not continue to play the next run but breaks through this resistance and touches our stop loss, and it is very quick to reach our stop loss. If this trade fails, we will have to admit our losses, and we cannot increase our stop loss, which is a mistake that a lot of the new traders who like to make. In the end of the video, I would share some mindset sharing. When we are trading, trade what you see, not what you think. A lot of times we have a strategy that is proven profitable in the historical data, but when we are involved in our trades, we would like to take profit early or increase our stop loss. Sometimes we do not even dare to take our trade when we see there is an opportunity that fits our trading strategy. If you have this kind of trouble, this is because we always break our rules and cause us a lot of negative results. As a result, we can't really follow our strategy and scared to open our trade when there is an opportunity that fit our trading strategy. And sometimes when we find an opportunity to trade, we would think too much even if that trade is fit to your trading strategy. It is important to understand that just because you think something will happen in the market does not mean it will. So, keep in mind, we need to be rational when we are trading. Leave a comment below and let me know if you get some value from mindset sharing. Due to the time constraints, I will end my video here. In my next video I will talk about how to use support and resistance to trade in the consolidation market. If my video helps you in some way, don't forget to like, subscribe and share. See you in my next video and hope you guys have a winning streak throughout the week.